गुड आफ्टरनून लेडीज एंड जेंटलमैन, इट्स अ फाइन डे ऑन दलाल स्ट्रीट। जैसा कि सुबह से बताया जा रहा था, मंगलवार है तो मंगल ही होगा। आपके सामने निफ्टी अब 24,470 190 अंक की तेज़ी। निफ्टी बैंक इज 650 पॉइंट्स हायर, 52,780. Across the board, there is this very thick shade of green on Dalal Street, and that's mainly on account of the fact that around 200-day DMA, it's the bulls that have gathered strength. FII net sales have tapered off, and more importantly, there is this expectation in the market that there might be a movement on the cash reserve ratio cut from the Reserve Bank of India on December 6th, when the credit policy for the busy season will be announced. All put together, for the third day in a row, the markets are up. In total, the Nifty has appreciated 570 points in the previous 3 sessions, and it's doing wonderfully well as far as bulls are concerned. Let's dig a little deeper into what the broader statistics are telling us. Despite the overall negativity in the market because of plans of higher GST on products such as cold drinks, on cigarettes, on high-end fabric and clothes and expensive watches, the market has taken it in the stride. As far as the advance decline ratio is concerned, 1770 stocks are in the green, 600 are in the red. We track 19 indices for you. Out of 19, about 17 are in the green, led by the banking pack. The Nifty PSU banking index is up 2.3%, the Nifty Bank is up 1.2%, and of course the Nifty itself is up 0.8%. Midcap, small caps, auto stocks, metal stocks and energy stocks, all of them are showing fairly decent traction. Let's get in conversation with Swati Hotkar. She's with us, joining in from Nirmal Bang, where she is the AVP for technical research. Namaste Swati ji. Good afternoon and a very warm welcome. How do you see this change in sentiment on Dalal Street for the last 2 sessions? Series of bad news being absorbed by the Nifty very well around 200-day DMA. What is your sense of the market?
Afternoon, Shelji. Definitely, the view is positive on the Nifty front as such. The last week we have seen that the Nifty has almost touched the feet of a 200 DMA, and again we have seen a bounce back rally. Now, I believe that this bounce back rally is likely to be continued towards the 50 days moving average, which comes to at around 24,600. So, up to that level means more 150 points full rally can be seen into the market. Initially, the resistance was at around 24,000 psychological mark. That breakout has been given, and I believe as long as Nifty sustains above that level, definitely this rally is likely to be extended. If you look towards the market breadth, also almost is 3:1 ratio, and on daily basis we are getting a sectorial rotation into the market, which is a very positive indication on the technical front as well. So I believe yes, definitely this rally is likely to be continued towards 24,600. More likely, in the coming few trading sessions, we are likely to witness a stock-specific market momentum rather than the Nifty or the Bank Nifty as such. So one should focus on the stock-specific trading rather than the Nifty or the Bank Nifty bull rally as such.
Okay. In terms of stock picks, what looks good to you?
See, at the current level, definitely Havells looks very positive on the technical front. The stock manages to give the breakout of 200 DMA. The currently we have seen in the month of from October to November, we have seen a sharp correction from 2100 to 1580, 1570 levels. Over that level, the stock has given the formation of a double bottoms, and from there onwards, we have seen a reversal from the oversold zone as well. So, looking towards all the technical setups of the RSI as well as the price and the volumes momentum, I believe this particular counter is likely to be extended this leg towards to 1830 to 1814 level. Currently, the stock is trading at 1750. So, I believe 100 points momentum can be seen in the near term. So, this chart looks very promising on the technical front.
Swati, what are you hearing from your peer group? What are they telling you in terms of this reduction in selling pressure as far as foreign funds are concerned? Just 298 crores yesterday against a DII buying of about 3,500 crores. What is the gossip on Dalal Street?
The gossip is nothing as such much on the Dalal Street. Definitely, the figures are not attractive from the FIs as such. Definitely, the sentiments becoming weak. Even now, because of the elections, election results, again, we had the US election, the rupee was depreciating. All those, then the Ukraine wars, and all those negative news has impacted our market. That's why the FIs and the DIs both have came into the for the selling purpose. But at the current level, I don't believe that there is much not negative news. Definitely, those news are already discounted. We have seen a very sharp sell off from the higher levels. Now, probably the confidence will come once this, Nifty gives the breakouts on the higher side levels. Then definitely again those investors will come into the market and try to invest. As of now, we have seen Shelji that rather than investing into the direct into the stock markets, definitely people are more interested into the mutual funds as of now, because it is a very safe investment and they don't need to take attention on a daily basis. Portfolio managers are taking care of their funds. So majorly we have seen funds are going into the mutual fund sectors as such rather than into the secondary market on a live trading as such. So I will suggest Kate not to worry into this kind of market. Roller coaster rally will likely to be continued in the near term as such, but definitely on every dips one should encash that those falls into an opportunity and take the quality counters as into the buying position.
I think that's a very sensible practical outlook, that you look at mutual funds to create long term wealth, and of course whatever short term indications are there, it seems to be on the positive side. 200-day DMA on the Nifty has held for the last 5-7 trading sessions, and we see some kind of profit booking happening around 24,500, where call writers are now active. So this is how the intraday positioning is working. Swati, just allow me a moment, let me mark a couple of stocks and I'll then come back to you. When we look at how the Nifty is performing, it's led by HDFC Bank contributing 28 points, L&T contributing 19 points, SBI Axis contributing 17 each, and Adani Ports which is up 6% today. Fairly sharp buying happening here, contributing 14 points. What's pulling the Nifty back? ITC. Swati, this is a view that needs to be taken from you. This GST recommendation coming in that cigarettes should be taxed at 35% instead of 28 has seen ITC slip 11-12 rupees lower during day, but a very sharp recovery. Around 200-day DMA, after this news, how do you react to ITC?
ITC is definitely one of the strong counter as such into the FMCG pack. No wonder we have seen some sell off on the news part and today, but we have seen some bounce back rally also. It will be a short lived because from the last 2 months we are continuously witnessing a low top, low bottom formations. Also, the interesting fact that the stock is not giving the breakout of the 20 days moving average, which is acting as a very strong. I believe more sell off can be seen into this particular counter. 450, 440 will act as a crucial support level. In between that level, it will form the foundation, and then onwards we can witness some sort of a reversal. At the current level, I will not suggest to any short position or any buying position fresh buy. Those who are interested in the fresh buy position, wait for some time, let the stock correct more up to 450, 440 levels, then definitely we are likely to witness more upside into this particular. Definitely on every dips, it should be a buy strategy should be applied in this particular stock. I believe once it manages to give a breakout of a 485 levels, then we are likely to see the extension of the bounce back rally towards to 520 to 540. So definitely it's a positive view on every deep as such.
And how about Indraprastha Gas? There is this bad news that afflicted the stock 3-4 days ago, that the government will be reducing administered price gassing, gas which it sells to IGL to the extent of 20%. IGL has raised prices, and today 5% higher, although a fairly sharp correction is still on the daily charts. Is the worst over for IGL? What do you recommend at 360? Today IGL is amongst the top gainers, up 5%.
You have correctly pointed. This is the right opportunity if you want to play the rally as such. So definitely at the current level, it's positive. Why I'm saying that, because in the year of 22 and in 2017, we have seen the multiple bottoms at 320, 330 levels. Same bottom has been tested in this year also, and we have seen some bounce back rally. So I believe that the definitely trend will turn into the positive side over a period of time, and which might take a counter towards to 450. I will not suggest to take a fresh buy position 100% at the current market price, but definitely 30-40% can be accumulated at the CMP, because the stock is showing a positive crossovers from the oversold zone. So the we are not going to witness major sell off as such, but definitely bounce back rally can be seen up to at least 450 to 480 levels. So it's a buy recommendation from my end.
Fair point. This is the view that is coming in on IGL. And while we are at the FNO space, let me highlight one very important point. Overall, 156 futures are in the green versus 76 that are in the red. So an easy 2:1 advance decline ratio favoring the bulls. And amongst winners is, of course, IGL, of course, Adani Ports, but strong traction coming into KPIT Technologies up 6.8%, Tata Elxsi up 5.2%, a strong move on banking counters such as Union Bank 4.3% higher, Bank of India futures ticking 4% up, Canara Bank 3% higher, Bank of Baroda 3% higher. Swati, cement is in very heavy demand. JK Cement up 3%, Ambuja up 5.1%. Dalmia, Ultratech, Shree Cement, all in top shape. Where is your eye concentrated when it comes to the cement counters? What looks good?
If we do the comparative analysis between the JK Cement, Ultratech, or Ambuja Cement, Shalji, I believe that Ambuja Cement is the very attractive counters at the current market price also, because we have seen a sharp correction from almost 660 to 450 levels. 200 points correction has been seen. The counter has tested its oversold zone. From there onwards, we are witnessing a reversal sign. And even it has tested the low of 2023 as well. So all the parameters are really hitting on the bull side, but we have already seen some positive momentums from the last few trading sessions. I will not suggest to take a buy call at the current market price, but if you're getting any dips towards to 540 or 530 levels, it's a definitely sure shot a buy call from my end. I believe this rally can be seen or extended towards to up to 640 to 670 levels. So definitely it's a buy call, is a top buy call from my end from the cement pack as such.
Fair point. Over the last 4 sessions, look at how Ambuja Cement has performed. A very sharp reversal coming in from 480 levels. In the last 4 days, the stock has moved from 488 to 566. And in terms of how the last 2 weeks have been, from a low of about 487, we are now at 566. 2:44 p.m. ladies and gentlemen. Still strength in the market, although the 24/500 call writer seems to be very active at this point of time. A strong move, 178 points higher on the Nifty. The IT index is up 215, in the Nifty 500 164, and the top draw today is the Nifty Banking index up 642. Swati, when you look at counters like KPIT Tech, Tata Elxsi and Birla Soft, what is a view that is emerging on the charts?
Regarding the KPI tech, definitely the view is positive for a shorter term period of point, because the stock has showing a positive divergence on the daily chart. So this rally can be seen up to 15, 20 and so level, but it will be a short lived. On the larger degree, my view is bit cautious on this particular counter. So I will suggest not to take a fresh long positions, but definitely if you are getting any price up to 15, 20, 15, 40 level, you can book your profits. Coming towards the Birlas of, definitely this counter looks very promising on the technical front, because we have seen already a sharp correction. The stock has given the breakout of a downward sloping channels, and after such kind of reversals, we are witnessing a decent volumes growth along with the price momentum. So whenever such kind of a momentum we witness, and from the last few trading session, we are seeing that this particular counter was stuck within the range of 585 to 600. Today it manages to give the breakout of that level with the decent volumes, and I believe that today we might witness some positive closing itself. So the overall the structure of the chart is definitely positive. The chart, this particular counter is likely to extend this particular rally up to at least 200-day moving average, which comes to at around 650 to 660 levels. So up to that level, we can witness a bull rally. So at the current level, definitely the risk reward ratio is very favorable. So one can take a buy call in Birla Soft at the current market price also by maintaining a strict stop loss of a 585 for a target of 640 to 650.
Okay, this is the view that is coming in on Birla Soft as also KPIT. Remember, both these stocks have corrected very sharply. KPIT was somewhere like 1900 rupees and now around 1430. Birla Soft was 870. Now languishing near 600 rupees. These are the kind of corrections that have happened over the last 3.5 months, and IT is in top form. Remember, Nasdaq is at a record high. So all these beaten down stocks where the corrections seem to be over are good positioning plays over the medium to long term. 247. Anything that catches your fancy in the cash market, Swati, which Nirmal Bank Securities is recommending on the long side after this kind of a correction?
Yeah, on the long side, as I already suggested, Havels is the one counter we are looking for a buy. Second one is the Campus. This is the particular mid-caps counter. Today it is already up by 3%. Why I'm suggesting those counters? Because on the monthly chart, we have seen a very strong correction. And apart from that, it is given the breakout of a 20 days moving average with a very good volume. So I believe the Campus has a very potential to reach up to at least 320 to 340 levels. So this is the counter we are looking for a buy side. Another counter is the BLS. This particular counter is also looks BLS International. This is a very strong contender. We are looking forward on a weekly chart. It has given the breakout of a symmetrical triangle breakout on the weekly charts with a very good volumes. So whenever such kind of a breakout gets on the larger degree, say weekly or the monthly, definitely we are likely to witness a major bull rally into this particular counter. The counter is trading at almost 419.20 rupees. It's already up by 6% on intraday basis, but definitely if you're getting any dips towards to 400 or 410 levels, one can take a long position. Stop loss can be kept at around 390. We are looking for a target of 450 to 460 levels on the high side.
Okay, so that's a cash counter that I am being seeing after a very long time. But yes, Havels, yes, Campus, and of course BLS International. 248. We have 12 plus 30, 42 minutes left as far as markets are concerned. The Nifty now taking a breather at 24,450. Remember, the intraday high was 24,490. That is where the call writers started to get active. Now let us see how the last 40-45 minutes pass, but for the moment this one looks a good day as far as markets are concerned. Let's look at some stocks which have hit record highs today. This is again in the form of representations coming in from the pharma space. We have Kaplan Point 2303. We have K Fintech 3% higher. There is a fairly strong move coming into Naukri.com 0.3% higher, and of course Policy Bazaar, Divi's Lab and Oberoi Realty. Real estate pack, Swati, what is your call on counters such as DLF, and of course anything that you would want to suggest technically on the charts?
On the I'm not much positive onto reality as of now. But if you're asking me about the DLF, my view is bit cautious at the current level. No wonder the stock is on the verge of the breakout, but it has not given exactly the sign of the breakouts. Today, from the last 2 days, we are witnessing a positive momentum on this particular, but we might witness some sort of a false breakout because this is the second time the stock is witnessing my downward sloping trend line. Now, we are looking for a breakout on the closing closing basis, not on the intraday tick as such. So whenever the breakout comes on the closing basis, then we can say the trend will be a confirm on that particular day. But at the current levels, my view is bit cautious. We might witness a rally of more than from here onwards, more 30, 40 points, but it will be a short-lived. So I will not suggest to take a fresh long position at the current market price. Those who are having, they can hold on by maintaining a strict stop loss of 830, which is acting as a previous swing supports level. So by keeping that stop loss, you can hold on long positions up to 880, 890 levels. You can book your profits.
Fair point. That's a view coming in on DLF. Let's look at volume buzzers in the market, stocks that are showing heavy price activity along with smart change in volume as well. HEG Limited and Graphite India. These are two makers of electric arc electrodes. These electrodes are used to melt scrap steel by steel companies. Both these counters are doing phenomenally well. Graphite India up 8.8%, 19 times 5-day averages traded, 1 crore shares. Look at HEG Limited, 14% higher. I remember taking a view with Rudramurthy, Mr. Rudramurthy today morning when it was up 10%. So gains have increased. 65 times the 5-day average, 1.65 crore shares have been traded. While this is already up a fairly decent percentage, I'm just marking these stocks. I'm a little hesitant to take a view on this one. Selling pressure on Map My India, the controversy, if I may use the word, between the CEO who has just resigned, opened his own company, taken away a bit of business from Map My India and started on his own, is concerning investors, down 8.7%. A lot of queries we are getting on very heavy volumes. This is 8.6 times the daily average, about 16.1 lakh shares have been traded. And of course, you have counters such as Vardhaman Textiles, such as CESE, such as KPIT, which are rising on fairly heavy volume. 2:53 p.m. ladies and gentlemen, it's the cement space. JK Cement taking it away, 3.4% higher, 46.49. Bharat Forge a percent higher, 13.56. Indian Hotels a digit change, 1% higher. Swati, Indian Hotels, what are the charts telling you?
So on the Indian hotels, definitely we have seen a very strong rally of almost 200, 250 points within a span of 1 month. This month we have, last month we have seen a very strong foundation. Quarterly charts, it has given 17% returns. As of now, my view is definitely positive because the counter is forming a flag pattern on the daily chart and it's on the verge of giving the breakout of the same. 809, 810 is the all-time high levels. If it's break out that level again, then we are likely to see the extension of this bull rally towards at least 840 to 850. So the view is definitely positive. Those who are having any long positions, they can definitely hold on by maintaining a strict stop loss of 770. That is acting as a very crucial swing supports levels. So as long as the stock holds 770 levels, upside can be seen up to 840 to 870.
Okay, anything that apart from the stocks that we've discussed catch your fancy in this kind of a market? Any volume busters, price breakouts that you are watching?
Yes, definitely. HEG looks very positive, promising. We have discussed on HEG. This counter is trading at 500, 501 levels. If we look towards the monthly chart, the stock is on the verge of giving the breakout of a 2021 high levels. And from the last few months, if you look towards the monthly chart, the stock has stuck within the range of 100, 120 points, between the range of 400 to 520. Now it's on the verge of giving the breakout of that level. It means on the monthly chart, we are getting a huge breakouts. Whenever such kind of a breakout gets cluster resistance breakout, definitely we are likely to witness some new rally in this particular counter, which might take a stock towards at least 700 to 800 level. If you're looking for a longer term horizon, at least for minimum 1 year and so, definitely this particular stock will enter into the 4-digit very soon. So one can take a fresh long position on every deep as such on the head. My target, initial target will be 700 and beyond that level, 1000 levels can be seen.
Okay. Would you also want to comment on Naukri.com? We've seen a very sharp move coming in on many internet based companies. Today of course Naukri is also at a record high. Is this momentum worth chasing or should we leave it?
The momentum is really positive. It's very difficult to chase the movement at a very all-time high levels because the market is too volatile. At any point of time, we may witness or see the profit booking or the corrections can be seen. So the risk-reward ratio is really not favorable at the current market price. If we are getting any dips towards 280, 200 or 8,000 levels, then definitely one can go for fresh long positions. But those who are having any previous positions, they can definitely hold on. This momentum can be seen extended towards at least 8,600 to 8,900. So my view is definitely positive, but the fresh positions are not recommended.
Okay. Within the universe of Nifty Midcap, Small Cap, Nifty Bank and Nifty, these four indices, Swati, where do you see the maximum strength?
Bank Nifty is definitely looks promising on the daily charts as well as on the weekly charts because it was the Bank Nifty who has managed or helped the Nifty to come on the higher side as of now. I believe this Bank Nifty is on the verge of forming the inverse head and shoulder formations. It has formed the neckline hedge and now it's under the formation of the right shoulder. So it's under the formation, but once it gives the breakout of 5,300 and 53,000 levels, then we are likely to witness a very strong momentum of at least 1,000 or 1,500 points on the higher sides. So I'm really much bullish on the Bank Nifty side. No wonder mid caps Nifty or the mid cap small cap Nifty indices are also really performing very well. But my eye is on the Bank Nifty side. We are likely to witness a more positive momentum into the banking counter. So this looks very positive on the technical charts as such.
And you know what, Swati, we haven't sort of really appreciated the record high that's there on HDFC Bank. That's the reason why Nifty has so much of strength. That's the reason why Bank Nifty has so much of strength. It's because the highest weighted counter in both of them has broken past its June 4th highs and is now at 1828. What is the view on HDFC Bank?
Positive view, Sanjay. No wonder because the counter in the 2024 itself has not performed very well. It was under the consolidation phase within the range of 1750 to 1600 days. Now I believe it has given the breakout with a very good volumes and slowly and steadily breakouts really works very well for a longer term durations. I believe it has a very strong potential to pick up this rally up to at least 2400 to 2500. So for longer duration definitely. This particular should be a buy call on every deep side such.
Okay, that's a view that is coming in. Let me just request the PCR to put in a longer term chart of HDFC Bank. In the past 5 trading sessions alone, or let's just say from a low of 14th November and we are on 3rd of December, the stock has moved almost 175 rupees, 1668 to 1828. That's the move that has come in on HDFC Bank, and it's the main contributor to the Nifty, definitely to the Bank Nifty, where it enjoys about 33% waiting points. 3:00 p.m. Swati, before we let you go, 1 BTST from your side.
1 BTST, Shelji, I would like to give on the IT pack, that is a Wipro. No wonder we have witnessed bonus 1:1. The price is currently trading at 291 levels. I believe over a period of time, this counter is likely to witness more buying or a positive momentums which will take a counter towards to 340 to 350 levels. I'm not giving for a shorter term duration, as you said, BTST. This is not that kind of a call, but definitely those who are looking for a very good kind of a returns, Wipro will do very good. If you're looking for a BTST only, Wellspun Living really looks very promising for the BTST call. This counter has given the breakout of the trend line, trading at a 160 levels. Positive momentum has been witnessing from the last few trading sessions. 160 is the current market price. Keep the stop loss of a 155. I'm looking for a target of a 170 to 175. So this will be act as a BTST call, but for a longer term horizon, my bet is on the Wipro.
Okay. Wipro, ladies and gentlemen, has now given a 1:1 split. The readjustment has happened today. Therefore, you see a 50% decline, but nothing is wrong with the stock. It's just the bonus adjustment that has happened. Thank you, Swati. What a pleasure to have you. And so many views that have come in on KPIT Tech, on HEG, on stocks such as HDFC Bank, and of course Wipro, your parting shot, are very well appreciated. Have a nice day and a nice evening. Thank you for joining us. Okay, ladies and gentlemen, the last half an hour of trade is now on the anvil. We will shortly be joined by Mr. Amar Singh, Senior Vice President for Research at Angel One Securities. We'll discuss both fundamental and technical calls in the market, but so far so good. And this has been a classic day for investors where sensibility and maturity of the Indian markets has come to the fore. Negative news both on Monday and Tuesday, and very well taken by sensible people who are pressing the buy counters on 200-day DMA as far as Nifty is concerned. Let's hope that this sensibility and maturity continues. A sharp gain in all those stocks that were beaten down, and the rally is led by none other than HDFC Bank, which is doing phenomenally well. A record high there, an underappreciated and very often a stock that has been not really given its due. But for those who held their faith and commitment on HDFC Bank, here is a record high for you. Let's hope that the rally accelerates. But for the moment, let's take a view in from Mr. Amar Singh, Senior Vice President for Research at Angel One. Namaste, Amarji, and a very warm welcome. Sentiment improves on Dalal Street. How are you feeling?
I would say that definitely any rally in the market is appreciated and liked by investors across the domestic or the international, I would say, players. And as you rightly saying that HDFC Bank has really led the charge because it being one of the heavyweights of the index, and it breaching, because earlier also I have spoken about HDFC breaching the 1780, 1800 levels, because that was acting as a crucial zone of resistance. It had earlier made highs of 1794 and then pulled back all the way down. And it was trading in a range of 1600 to 1800, that was the range. But that range has been broken. So now the key question is that HDFC sustaining above the 1800 is something which is very important. So we'll have to look at the weekly closing for HDFC. But looking at the trend across different time frames for HDFC Bank, so that continues to remain strong and positive across the intermediate term trend or the long term trend or the short term trend. So when all the trends are in particularly in, I would say, sync. So there it clearly shows that there is definitely interest amongst the investors across. I would say be the investors or traders to get into this stock, because when HDFC Bank starts moving, that is definitely a positive sign, and we are seeing that clearly reflected in Bank Nifty's move. And HDFC sustaining of the 1800 levels, it definitely has the potential to rally towards the 1890, 1900 levels. So we could see further upside move there as well.
Okay. Amar, in terms of sheer index strength, amongst the four, which is Nifty Bank, Nifty, the small cap and the mid cap indices, which one has the maximum strength?
I would say right now, going by the moves that we are seeing in the banking space, in the PSU banks, as well as in the private sector banks, banking is where we could see some further action, and which could lead to movements in other, I would say, other segments. As far as the small cap and the mid cap is concerned, yes, we've seen some pullback there as well, but I would still put my bets on Bank Nifty.
Okay, fair point. The other thing I wanted to take your view on is that because you look after the research department at Angel, you must have come up with 4 or 5 stocks where sensible long-term players can buy into them at current levels, whether in a SIP format or maybe piecemeal or a good chunk immediately. If you can just share the names, that will work very well.
So one is from the automobile space. Tata Motors is one stock one can definitely look at from a long-term perspective. The stock has corrected. It's always and the stock is, if you look at the models of which are coming out from the Tata Motors table, that's really phenomenal. The curve which has come off from that has taken off quite well, and there are other models also. So I would say, and EV is definitely, because earlier that was a weak link for Tata Motors, but there they are working quite aggressively there. So this is one stock you can look at very closely. The other is Bharti Airtel from the telecom space. Again, a winner. It has delivered strong returns. This again is a stock because telecom as a sector is definitely bound to grow, and with the penetration and the, I would say, technologies coming forth, this company could also gain from that. However, we'll have to watch out for how the Elon Musk Starlink, if it comes into India, how that plays out, because that could have some impact or significant impact on the existing players in terms of the internet space. So that's the second stock to look at. Third is from the real estate space, and there one can look at DLF from a longer term perspective. So again, on corrections, because real estate is more of a cyclical in nature. We did see earlier also there was a significant rally and then there was major correction. So it's very closely tied to the economy of the country. So, but from a long-term perspective, this sector is bound to grow, because as the wealth accumulates and distributes across segments and across tiers, so be it tier 1, tier 2, tier 3 cities, we are seeing that most of these developers are now are spreading their wings and they're moving into new territories, while at the same time they're also looking at different segments as well. So that basically helps them diversify. So this is one stock also one can look at. And the fourth one is from the space, and that is electronics. So this is again one stock from a long-term perspective. It has rallied significantly. It's been a multi-bagger, currently around 311. But again, stock SIP, this one can keep a close watch on this as well.
I'll request the PCI to please fire long-term charts of BEL and other stocks, because intraday it seems that nothing seems to have happened. But BEL has done phenomenally well over the last 1 month or so. 275 and of course 311. No doubt in my mind that we will see a record high on BEL fairly soon. 3:08 p.m. We have 22 minutes left for trade. Let's take Amar's opinion on metal and cement counters. A view emerging in the market, Amar, that we might see a CRR rate cut on Friday by the Reserve Bank of India. What stocks, what sectors do you think will be the biggest beneficiaries?
I would say, see, if there is a cut, then we'll have to see that because that would effectively mean that there could be some more flows in the markets. So that is there, and also that could further mean that we could see some sort of means that RBI is more currently there. But there is one caveat which I would like to add, is that the rupee has been depreciating significantly. It is hitting record highs, and also how the dollar plays out in coming weeks and months is something which is going to be very critical and crucial. And the RBI is keeping a very close watch on, because that could have an impact on our both our exports and imports. So the deficit could get impacted. So I think there RBI will have to keep a close watch on. So we'll have to wait and watch for that.
Yes, a record low on the rupee is something that you mentioned very well. Remember, two export-oriented counters, sectors, pharma and IT, are beneficiaries of a depreciating rupee, and this is something that has already been appreciated by the market, especially the Nifty IT index. It's up 225 points. Let me just check what's the record high on the Nifty IT index. Remember, the Nasdaq hit a record high yesterday, and let's look at ES. In any case, we are at a record high on the Nifty IT index as well. So please keep an eye out on both pharma and Nifty IT. These are spaces which benefit from the weakening of the rupee. Let's see what the market is throwing up at 310. We have 20 minutes of trade left. Let's look at the small cap index and point out winners in trade today. The Nifty small cap index is right there in front of me. Let's look at the top gainers here. We have BLS International Services 6.5% higher. The steel unit of NMDC, NSL NISP is up 5%, 48.3. Manappuram Finance is doing very well. Z is 5% higher. Angel One 4.5% higher. I'm very sure Amar will not comment on Angel One, but we are marking the price. Banks are doing pretty well, JK and RBL. Amar, your view on public sector banks, what would be the top pick there?
So if you look at the public sector banks, we've seen some very sharp pullback there, and it appears that we could witness some further upside move there as well. But among the public sector banks, I would like to go with SBI in particular, though it's if you look at most of the PSU banks, so one by one, if I talk about, we are seeing some pullback happening in Bank of Baroda as well, because Bank of Baroda is trying to breach above the 250, 260 zone, and it is now looking positive on the intermediate term trend. So which is a positive sign. If I look at Bank of India, we've seen some positive moves this week. And amongst other PSU banks, if I look at, then more or less we are seeing some sort of consolidation. As I talked, SBI is quite strong on the charts. It's currently around 884, trading above 860, 865 levels. There's a very high possibility of it hitting its all-time highs, which was around 910, 12 in the month of June.
Okay, ladies and gentlemen, I'll also mark a particular stock, which is Jio Finance. We are seeing a very, very rapid move coming in on the counter after a very, very decent correction. First, your view, Amar. Positionally, Jio Finance 340 today, 3.4% higher. Until very recently, we saw 295 on 14th November. Your view?
So I would say Jio Finance has bounced back, and as you rightly said, today is a very strong day, and also on I would say 14th of November was a very strong 15 or so trading sessions. These are the two strongest days, and the stock has managed to trade above the 335, 330, 335 zone, which was acting as a zone of resistance. So taking that out, Jio would meet with some resistance around the 350 and 360. So 350 and 360, 65, that's going to be a zone of resistance for the stock. If you look at on the charts, the daily charts are definitely strong, and we are seeing a sharp build-up in momentum. Weekly charts, to a certain extent, we are seeing some sort of consolidation there. So the stock could rally further towards 350, 360 levels, where it could meet with some resistance. But the trend is positive for Jio Finance as of now.
Okay. 314 Jio Finance is what is there in front of you. Now I'll request the PCR to fire the long-term chart of Jio Finance, and you will look at it from the point of view of a correction that has taken place on Jio Finance from its recent peak on 23rd of April, when it was at almost 392 rupees, all the way down to 297 rupees. So that's a very decent 25% cut that has happened, and from then on the last 2 weeks have been phenomenal. From 297 we have 341, and today is a breakout day. The counter is now above its shortest moving average of 330. Let's see where it goes from here. Anything that you are observing in the market as of now, Amar?
So if I look at the stocks, then in that case, Torrent Pharma is something which can be looked at. The stock has rallied because basically it did recently rally from almost 3,000, 3,075 levels towards 33, 3,400 levels. But this is one stock which is positive on the short term as well as the long term trend. So any pullback in this stock can be a buying opportunity. However, on the upside, seems to be capped around the 3,500, 3,550 level. So this is one stock one can keep a watch on.
Okay, torrent is what you are talking about as of now. 3262. My God, I'm seeing the price for torrent after a very long while. Kunal, my apologies. Amar, in the new entrants that we have, which is PB FinTech, the likes of CDSL, CAMS, in the FNO space, amongst the 45 new ones, where do you think is the maximum potential on the long side in December's expiry?
So if I look at PB FinTech, that is Policy Bazaar, we've seen the stock rally and reach its crucial zone of resistance, which was earlier around 1966. But today it has corrected from the highs. So it's touched almost 2000 and then it has corrected and is currently trading on 1923. So this is going to act as a very strong zone of resistance for Policy Bazaar. And if we look at it on the charts also are clearly pointing that this could be a double top as well if it's not able to sustain and close above the 1960-1970 zone, because that was the previous top which the stock had made on 20th of September, and from there it had corrected all the way towards 1630 1600 levels. So again, it has witnessed a rally, but I would say that one can keep a close watch on this. If it sustains out the 1660 or today's high, I would say that's even better. So sustaining of that, then we could witness a sharp rally. Otherwise, it could witness some consolidation.
And this is one question that I've been waiting for you to come on air and discuss it. This is the wealth management side. I'm sure you will not talk about Angel One, but record highs on CAMS, record highs on CDSL, and record highs on K FinTech. What is the market thinking, and what are your views on these three stocks?
So if I look at CAMS in particular, it has had a spectacular rally, currently trading at its record highs. Despite market correction, this is at record highs. And also, if I look at it on the charts, the momentum is very strong technically on the charts from a short-term perspective. Long-term is very strong. Weekly, we did witness it into consolidation from 4200 levels to 4800 levels. It has breached that. So this is one stock I think one can keep from a long-term perspective. And the other stock which you mentioned, if I look at CDSL, so if I look at CDSL again, this also has a similar structure.
Yes.
As compared to CAMS, and daily charts are quite strong and positive. However, if I look at it, so the stock was earlier had made a high of 1664. So that was on 23rd of August. And then it had recently made a high of almost 1678, again 8th of November. And recent high was 1692. So the highs are higher, but the stock has resistance around the 1680, 1700 zone. So that's a level to watch out for. Those who are long, I would recommend at least booking part profit. And if they want to hold it from a long-term perspective, this again is a stock from a stock SIP perspective makes sense. One can look at it from that perspective, and CAMS also is quite promising from a long-term perspective as well.
Fair point. These two are multi-baggers in their own right. CAMS and CDSL, people have made tons and tons and tons of money over the last 4 or 5 years. I remember CDSL at 200, 250, 400 rupees around the COVID time. What you see is 1663. This is a 1:1 bonus, so the actual price is around 3300. It's been a 10 bagger over the last 4 years, and CAMS services I remember at about 800, 900 rupees. That's also done phenomenally well over the past 4 or 5 years or so. 3:20 p.m. Ladies and gentlemen, before we let Amar go, one view for tomorrow and one BTST or STBT candidates.
Yeah, so I would say from that perspective, one can look at Bajaj Auto.
Yes.
Bajaj Auto, yeah, we've seen the stock correct significantly, and then today the stock has witnessed a bounce back. It seems to be forming a base, sustaining above the 9200 levels. The stock has the potential to rally towards 9350 odd levels, and the stock has got good support coming at the 9000 odd level. So this is one stock one can look at from a short-term perspective.
Okay. That's a good one that is coming in. Geo Finance has risen dramatically. Any view that you would have on Bajaj Finance? This is something that has not appreciated at all over the last 4 or 5 days when both Nifty and Bank Nifty have done dramatically well. Bajaj Finance.
See, if you look at Bajaj Finance really hasn't been performing over the last many quarters, or to speak of weeks and months. So the stock is stuck in a range. And if you look at on the upside, around 8,000 levels, on the downside, somewhere around 6,200 odd levels. So it's stuck in a range, good from a trading range perspective. If I look at it on the long-term charts, it's really a range play. If I look on the weekly charts, again, a range play. If I look in the daily charts, it's trying to form a bottom, but it needs to sustain over the 6,800 level for any meaningful rally towards the 7,000 odd level, where it could meet with some resistance. So breaching above 6,800, sustaining above 6,800, the stock could witness a rally towards 7,000, 7,100 level, which could be the next zone of resistance. Yes, the stock seems to have formed very strong base around the 6,400, 6,450 level, because earlier these were the levels which the stock had touched on 16th of August, and then again as recently as 21st of November. So it's a double bottom for the stock, but sustaining over 6,800 is important for any rally in Bajaj Finance.
Before we let you go, Amar, what are the clients? What is the majority view when clients speak to you? Are they sitting on losses? Are they sitting on stocks that they wish they hadn't purchased? Are they looking at maybe buying the market around 200-day DMA? What's the general feel that you are getting when you speak to them?
See, in markets, you've got all types of clients, all types of people, all types of traders and investors. So, and also it requires at times that you have to have the courage to step in when the majority is staying away. So, like so whenever there's a significant correction, I would say it's always a good opportunity to get into quality names, because there the risk is comparatively lesser. See, risk cannot be removed completely. There's always be risk in the markets. So that one needs to understand and appreciate. Those who understand and appreciate, they are better placed, because then they think more logically. Otherwise, people would think emotionally when the markets correct significantly. Having said that, those who are looking at it from a long-term perspective, they always look at it from a stock SIP perspective, or maybe a mutual fund or an ETF perspective, or stock picking. If they do, then it's more that you have to have some sort of technicals. As you rightly said, 200-day moving average is something which is very commonly and popularly looked at, and it does work many a time, but sometimes it fails as well. But that's part and parcel of it. So investors and traders alike, they definitely find the markets challenging as well, because sometimes you see up moves and then you all of a sudden you witness a sharp down move. That's the way markets are. We have to accept them that way. That way we will be, or the clients will be able to prosper better.
Right. And in your own portfolio, in your own investments, what have you been up to?
So more of the blue chip stocks and more of ETFs from a long-term perspective.
Any ETF that you would like to suggest at current levels?
See, ETFs, if you look at ETFs, I would say Nifty Next 50, Nifty ETFs. So combining these two can give good results from a long-term perspective.
Nifty Next 50, you're talking about Junior Bs, is it?
Yes.
Okay. Nippon Junior Bs, ladies and gentlemen, one of the finest wealth creators in the market. Let's see whether we can show you the price or not. This has been, yes, wow. 768, unbelievable. I am watching this price after many months. The all-time high is again 830. We are at 767. In our PCR is one gentleman called Gopal Krishnan. I will tell him my purchase price on Nifty Junior Bs. It's in 2 digits, but what a remarkable rally, and what a wonderful suggestion to come out of Amar at current levels. Fabulous, Amar. Any closing thoughts, any parting shots?
Yeah, I would say that because if you look at Nifty, we are seeing some sharp move for the last few days, strong on the short-term charts. Intermediate-term trend still continues to be quite, I would say not quite negative, but yes, some of the technical indicators they are cause of concern. So effectively, one needs to be slightly cautious. Long-term trend, however, remains strong and positive. So Nifty needs to close and sustain above the currently it's around 24,440. So last month's high, that is November high, was 24,537. So anywhere sustaining above 24,500, 600 would mean that the move which we had witnessed earlier, the sharp sell-off which we had witnessed from almost 26,300 levels, that would be over. So 24,500, 600 would be a zone of importance in terms of resistance on the upside.
Before we let you go, Amar, would you want to comment on ICICI Bank and Axis Bank? The reason why I ask this is because HDFC Bank has hit a record high. These two should follow suit.
So if you look at the structure of ICICI Bank per se, so ICICI Bank is positive on the long-term charts, but the intermediate-term trend isn't very strong and promising. So effectively, it means is that we could witness some consolidation. Like HDFC Bank is trading at its record highs. The structure of the chart is very different from what is there in ICICI Bank. So ICICI Bank would have resistance around its all-time high. So anywhere between 1350, 1360 is going to be a zone of resistance. If I look at Axis Bank charts, Axis Bank is definitely, if you ask me to rate or rank the three banks, number one would be HDFC Bank, and second would be ICICI, and third would be Axis, because Axis is quite weak on the intermediate term trend. So effectively, 1200, 1180, 1200 is where it would meet with resistance. It's good from a trading play perspective. 1120, 1100 on the downside, 1200 on the upside. So 100-point range is for Axis Bank in the short term.
And remember, out of these three largest private sector banks, Axis Bank is at 200-day DMA, something to ponder upon, and HDFC Bank is at a record high. So these Amar, you were saying something.
Yeah, that's the reason we are seeing strong support for Axis Bank around the 1100, 1120 zone. But it needs, as I said, for any meaningful rally, it needs to sustain above the 1200 zone for Axis Bank. HDFC Bank, the structure has changed on all time frames, be it the short-term, intermediate-term trend, long-term trend.
Correct.
That helps.
Absolutely. Thank you, Amar, and what a wonderful conversation. I'll still remember junior Nifty ETF at 80 rupees, now at 770. Thank you so much for your time, and of course, we'll remember all this advice that you offered on not only ETFs, but also on frontline counters such as Bharti Airtel, CDSL, CAMS, and of course, PB Fintech. Thank you for your time.
Thank you for having me on the show.
That, ladies and gentlemen, is the end of markets today, 3:29 p.m. What a fabulous, fabulous day this has turned out to be. 165 points uptick on the Nifty 50 on a day when possibly the second news that could come, recommendations on increasing rates on many commodities hit the markets, but the maturity and the efficiency at which markets and bulls have digested this negativity ceased to be believed, and from now on it seems that 24,400 will be a fairly strong support for the bulls. Let us see what happens tomorrow. It may be tested once, but 24,500 is where the action will be tomorrow. We've had 3 straight days of gains. The Nifty is added 570 points. If Wednesday turns out to be a bit of a rest day, one should not be worried. But the worst for the markets seems to be over, ladies and gentlemen. Let's hope for the best in the coming days. On Friday, we have the RBI credit policy. As I've been telling you since yesterday, there is this hope trade in the market that liquidity in the system will be provided by a CRR cut by the central bank, and that should be helpful for the credit part of the market. Therefore, banks are rallying. HDFC Bank is at a record high. and of course all the quasi lending plays, which is autos, which is real estate, cement and steel, are the ones that are in thick action. Thank you for watching us during the day. Please remain glued to Business Today Television. There's lots happening on the other side of the break. Thank you.
RSS Sarsanchalak calls for a relook at India's population policy.